Hey guys, it's Mr. Oxy coming at you from Palm Beach in Florida. It is Friday. Yay. I guess, what a week. Um, I had some people talking to me about, you know, uh, the energy market crashing, Oxy tumbling, and then having a good day in between, going up 5%, going down again the next day, whatever. Ups and downs, volatile as it is. Um, and who knows what will happen today? Maybe a little bit of a bounce back after the administration scared wealthy people in the United States yesterday by saying that they are going to tax long-term capital gains by even close to 50%. In fact, in some states, because of the state tax, would be over 50%. I always say wealthy people vote with their feet. So you got to be careful when you just say, I'm going to create a new tax plan to appease my base, or make my people who voted for me or who like me think I'm even greater than I am, or help me with my popularity, or whatever the case might be. The fact of the matter is, wealthy people vote with their feet. If you tax me into oblivion, I will simply take at least what's left of my wealth and certainly my business interests elsewhere. I would just incorporate elsewhere. That's one of the reasons why we saw such an incredible boom in countries like Ireland, for instance, because they basically just said, come to us. It's almost like a semi-tax haven during the time when most of the European countries were taxing people, as I just said, into oblivion. Anyway, what I wanted to do today is just take a couple of minutes. I'm not going to take too long, but I do want to share with you a presentation that I just put together. It's actually information provided by Credit Suisse, and I just called it an energy sector review. They actually published 5 papers just this past week on the energy sector. And I thought I'm just going to go through some of these slides very quickly with you. Some of them are going to be educational. Some of them might be a little bit boring, but I'm just going to give you the highlights reel from each one of them. I'm going to tell you where there's a mention of your favorite stock and mine, Occidental Petroleum, and then we'll wrap it up with Oxy, as I usually do, because I'm Mr. Oxy. So here we go. So let's take a look and see what Credit Suisse is saying about the energy sector as a whole. So the first paper that I picked up was one by Spiro Dounis, who wrote U.S. Midstream and Master Limited Partnerships Calm After the Storm. So this particular slide here is a bit busy, but it's made even more busy by the fact that I added a whole lot of stuff to it. Commodity dashboard in Q1 of 2021. So in other words, looking back for the period January, February, March, what happened? Right here at the bottom, I put in a little note that says this is comparing it to Q4 of 2020. In other words, this is comparing the first quarter of 2021 with the previous quarter. During that time, crude oil, the pricing for WTI was up 36%, natural gas, 26%, natural gas liquids, this is Mont Belvieu, I'm going to come back to that one in a second, up 42%, that's quite a bit. The difference between these two here, natural gas and natural gas liquids, I dropped in this little description here in case you don't know, because I didn't know. Prices are based on delivery at the Henry Hub in Louisiana. So that is a place, not a particular type of commodity, like, for instance, West Texas Intermediate oil. The natural gas liquids, NGPL, composite price is derived from the daily Bloomberg spot price data for natural gas liquids at Mont Belvieu in Texas. In other words, that is a place. And then we look at production. Crude oil was down 6%. So if there's less crude oil being produced, that means somewhere along the line, there's going to be a shift in the supply-demand curve. Natural gas down about 2%. And look at exports, flat. Crude oil. We know a lot of crude oil has gone to China. So where did it come from? Because this is US-based data. And then we look at the exports of gas, and you can see there's a bit of a variance there on those two particular slides. But let's take a look at this one. This is quite interesting. This is Credit Suisse basically saying this was our estimate and the consensus, and this was the variance. You can see some of your favorite stocks and mine over here on the left-hand side, just very quickly. Sunoco, Energy Transfer, MMP comes up quite often. CQP, etc. So let's take a look at this one. And the only thing I want to do here is look at the larger variances, so 8%, 4%, 7%, etc. What is the difference? And the first one is the first quarter 2021 EBITDA, Credit Suisse estimate, the consensus, and the variance. And the next one is actually the fiscal year 2021 estimate for EBITDA, Credit Suisse consensus, and then the variance. And let's look at some of these outliers very quickly. The first one is Sunoco. Currently, they say they're neutral on Sunoco with the target price of $34. Yesterday closed at $33.65, so it's sort of there or thereabouts. I'm not sure if it's going anywhere, but there's an interesting comment here. The annual 7-Eleven makeup payment and higher margins from less one-time items drive higher sequential results. Lower sequential volumes partially offsets. I'm not going to go into depth on this one. I just wanted to show you the few on which there were variances. Now, if we look at the Cheniere Energy, so you got two different tickers here because what you have is LNG, which is Cheniere. I hope I'm saying it correctly. I'm probably slaughtering the name. My French is not too good, and that looks like a French word. And CQP, which is their energy partners partnership. So on these particular commodities, Credit Suisse has an outperform on energy, and they have a underperform on energy partners. So it's quite interesting. Yesterday, Cheniere Energy closed at $72 and their target price 86. So there's a little bit of an uptick there that you could possibly expect if this is one of your investments. If you're invested in LNG, tell me in the comments and let me know why. Dlac, this is a company I'm not familiar with, so I had never actually heard of it before. And obviously there are many oil and gas companies that I'm not familiar with. This particular commodity is trading at $38. They're neutral on this one. They say the target price is 37. We expect lower throughput from maintenance and winter storm downtime to drive lower sequential results. Slight miss. So a little bit of more information here. This is from different papers. So this is actually from the second or third paper that I found from Credit Suisse on the energy sector as a whole. Master limited partnerships, the forecast change. We expect the earnings cycle to be relatively quiet. Guidance is either maintained due to negative storm impacts for some or upgraded. It's either maintained or upgraded, right? So guys, that already is a positive from my point of view anyway. If you can maintain guidance or you can upgrade it, that's a good thing. If you downgrade it, that's something else. We expect names like OKE and ET to upgrade guidance. The potential for MMP to upgrade guidance on butane blending. And then right at the bottom here, we expect management teams to maintain free cash flow allegiance while also touting low capex growth potentially in 2022, supported by latent capacity and operational leverage. Just sort of at a macro level, mostly good news for me here. EMP, so exploration and production, the sector review. The focus on which EMPs are positioned to announce new incremental return of cash frameworks. There's a couple of things here. The precise formula will vary, but in our view, EMPs will need to offer a total cash return yield, some combination of base dividend, variable dividend, and or buyback. Right at the bottom here, it says, despite above average free cash flow yields, the need for further balance sheet repair is the primary impediment to accelerating return of cash for OVV. And you see a couple of stocks down here, including your favorite and mine, Oxy. So according to Credit Suisse, Oxy needs to first further repair its balance sheet before it will be able to start returning some cash to investors. I think we know that, so I'm kind of preaching to the choir, but it's okay. I'm just touching up on some information here. Sentiment dashboard, this is a different paper once again. NGL means natural gas liquids, which includes ethane and propane, in case you don't know what NGL is. You look at the prices here and you look at the change. This is current month compared to the previous month. This report is brand new. It was published just a few days ago in April. I think it was on the 21st. Look at the change in natural gas liquids pricing. Composite up 167%. Demand. We're heading into the summer, and you can say there might be a bit of a drop off in terms of NGL for heating, but obviously summer's coming, so then picks up again for cooling. in addition to products like propane for backyard barbecues and things like that. So looking pretty good. So I'm just going to wrap it up here with Occidental. I didn't even put the header there because you will know if I show you a chart with no reference to anything else, it's got to be Occidental. This was yesterday's close, April 22nd. It went down after hours, another 4 pennies or so. It's trading at about 24 bucks. You know, people frequently ask me, where's Oxy going? I have no idea. Pretty much like you, there's simply no way for me to know where Occidental is going. So the fact of the matter is this. If you bought, or if you were lucky enough to time the market, which is almost impossible and highly not recommended, trying to time the market, but if you were fortunate enough to, let's say, pick up some Oxy at 10 bucks or so, you're up more than 100%. You're pretty good. Now, a lot of people criticize me on my YouTube channel via email, in LinkedIn messages, and a whole variety of different things. And they say, Mr. Oxy, telling people to who are up 100% or more to sell half of their stock and then let the rest of it just run is really bad advice. So in the first place, it's not advice because I don't offer advice. I just offer educational information. But the fact is, if you've invested whatever, $1,000, $10,000, $100,000, and you're up more than 100%, and the fact that Oxy is super volatile in your mind anyway worries you, sell half of it, take your profit, which means you've recouped all your investment cash that you've put in, and let the other half just do whatever it does. If Oxy goes to $100, you're going to kick yourself for having sold it for 20 bucks. And if Oxy goes to $5, you'll say like, damn, I was so smart. But how volatile is it really? Look at this graph. So we had this flattening of the curve, and this is 1 year, right? So we had this flattening of the curve after the big crash, the coronavirus crash. We've had a couple of extraordinary spikes, which is interesting, and the dips in between. Right now, just a month ago, we had a spike, and now we have a dip. So now we expect another spike, and we may get another dip. None of this matters. I'm just sharing information with you. So, guys, give me your thoughts on oil, gas, exploration, production. Are you invested in these things? Let me know in the comments. Let me know what you think. Let me know if you disagree or agree with Credit Suisse and all their estimates that they're publishing. And if you want to look up those papers, you could easily just Google Credit Suisse energy sector analyst reports and get all 5 of the latest reports for yourself. So on that happy note, guys, it's all good news. Have a wonderful Friday. Have a great weekend. Next week, I'm going to start doing some work on some of our favorite energy stocks because their earnings are coming up. And I'll put together a few little videos on that. So for now, this is Mr. Roxy saying stay safe, take care, stay away from the coronavirus, and I'll see you guys soon. Bye-bye.